This simple scalping strategy gets me results like these on a consistent basis. And the best part is this strategy is easy to use, completely repeatable and systematic. And in this video, I'm going to reveal to you the full strategy step by step. I'm going to prove it with hundreds of trades of data, and then I'm going to walk you through some backtesting. Now, my goal is simple. I want to make you a consistently profitable trader. And my plan to do that for you in this video is to give you an easy, repeatable, and proven being the key word, strategy. And so here, what you'll see is the data on the strategy that I'm going to be sharing with you in this video. You can see over 2.5 years of data, 577 trades taken. This is our equity curve over this 2.5 years. This is proof that this strategy actually works. You see all these strategies online, and the reality is everybody just shows you a couple of trades. Well, here's 2.5 years of data proving it, and it's completely mechanical. Let's go through the rules, and then let's go through some trade examples. Now, this strategy can be understood in 3 simple steps. The first thing that you need to understand is there are 2 time windows to trade this strategy. The first time window is our 2 to 5 a.m. Eastern Standard Time. That is our London window. The second one is the 7 to 10 a.m. Eastern Standard Time window. It's going to be our New York session. This is the time that this strategy has been proven and tested with. So dialing straight into step 1. Step 1 is a sweep of previous day's low. So here we are, as you can see. Now, the first thing you have to do is identify the previous day's low. So the day starts at 5 p.m. Eastern Standard Time. That is the daily close and daily open. So we can see here, this low was created at 3 p.m. And after that, there was no lower prices that were put in. So this day begun up here at 5, and the day finished here. And the lowest point of this entire day is here. So this is the previous day's low, the lowest point of the previous day's price action. So when we come into the next day, what we want to see for step 1 is a sweep of this level. We need to see price trade into this level. Once you get that, as you can see here, right, we have traded below this low. We have breached this low. So that is step 1 complete. That leads us straight into step 2, which is drop to the 1-minute time frame and wait for a market structure shift. So when we get below this low, we need to go to the 1-minute time frame. So you can see this is the same previous day's low. Once we get below that, and again, you have to be inside of this 2 to 5 a.m. or 7 to 10 a.m. You can see here, 2 a.m. session starts, and it is currently 3:30 a.m. So this is my London window. So what we can see here is we need to wait for a market structure shift. A market structure shift is simply just an area of price that had some type of structural level. So if we mark out different types of structure, we can mark out high here, low here, high here, right? None of this because it needs to be at least 2 candles, high, and then low, right? So these little points of price are our structure levels. So you can see the most recent area of structure is here. So if price trades through this level, that would be a market structure shift. That is what we're waiting for. So after this sweep has happened, it's simply just a waiting game. Now, once we break this high, now we have a market structure shift. Now we can move on to step number 3. And step number 3 is simply just an entry on an area of interest and to target 3 risk to reward. It is so simple that I could genuinely teach my little sister to trade this strategy. We have shifted this level. Now I need to look for an area of interest. What I usually do is go to a 15 or a 5-minute time frame. So on the 15-minute time frame, it's a little bit of a large area. So I'll drop down to the 5-minute time frame. On the 5-minute time frame, it's much cleaner. The first thing that I can see is that we have this really nice fair value gap in here. So that's an area of interest, this fair value gap. What I also see is the final sell to buy, which is an order block as this area in here. So that's my area of interest. I have 2 areas of interest that overlap each other. I can simply just take my entry on this sell to buy, which is my order block, right? And we can just mark that out. So from this high to this low. And I want to just make sure that I'm covering this low as my stop loss. And then I just need to target 3 risk to reward. So 1 to 3. And that 1 to 3 is here. That is literally it. Step 1, we sweep previous day's low. Step 2, we have a market structure shift. And step 3, we set this order and we wait for 3 risk to reward. And if you play price out, you'll see we've been tagged into this trade, a really nice reaction out of price, aggressive push toward the buy side. New York session opens, and we hit our 1 to 3 risk reward, and that's the position closed. That is literally how simple this system is. Let's show you another example. So here you can see we are in the next day. So where is our previous day's low, right? The low from yesterday. Well, if we remove all this, the lowest point that price reached is this London low. The highest point that price reached is the high that was traded just after New York. That's my previous day's high, previous day's low. So we now need to wait for this low to be breached. That is step number 1. So it's just a waiting game. Now you can see in our London session, we have breached this low. So now we can go to a 1 minute time frame and move on to step number 2, which is wait for a market structure shift. That market structure shift in this instance is going to be here. So we simply just wait for this price to get traded through. And you can see price doesn't trade through it. So we can just move our price leg down. That becomes our new structural high. And it's just a waiting game. You can see again, we failed to do that. So what happens? We find a new structural high. And now we need this level to be traded through. And we wait. This is the 5 a.m. So now we have exceeded our London session window. We can no longer trade. Now we have to wait for New York session. So here's the open of New York, right? 7 a.m. And you can see here that we have shifted London low again. And if we drop to a 1 minute time frame, we're just waiting for a shift of structure. And you can see that that shift of structure comes already. We've shifted this level in here, which is a market structure shift, with a bunch of other highs as well, like this one, this one, this one, and this one. So we've clearly had a market structure shift. We're clearly below previous day's low, and we're clearly in our window between 7 to 10 a.m. So it's the same thing again. 5 minute or 15 minute time frame to try to find an area of interest. Again, the area of interest is very similar like the last one. We have a nice fair value gap in here that we've just created. So I can go ahead and take my trade at this fair value gap level, put my stop loss just below this level in here, and then target a 1 to 3 risk reward, and then just see how price plays out on the 5 minute time frame. You can see we have a really nice tag perfectly from this fair value gap, and we start getting an immediate reaction toward the buy side. Now this is the strategy in a nutshell. However, there are multiple variations of this system. So this previous day's low sweep is just one of 5 different variations that I have for this strategy. Now, if you want to learn more about this strategy and all of the step-by-step rules and the variations, and maybe you even want to trade live with me and my inner circle members on a daily basis, then below this video, I'll leave a link. You can fill out a short form to apply to work with me and my team, and we will make you a profitable trader.